A new era of high interest rates is starting to bite in corporate America, whose overall borrowings now total $13 trillion. Companies that grew accustomed to cheap debt are now adjusting to a world where financing costs more. The Federal Reserve has raised interest rates aggressively since March last year, translating into higher debt servicing costs for businesses. And even though the US Central Bank held rates steady at its last meeting, many expect borrowing costs to remain high for some time. With more than $3 trillion of corporate debt coming due in the next 5 years, analysts and investors are concerned that we could see an increasing number of defaults. Many companies are navigating this new environment by finding ways to minimize their debt costs. But even when companies do default, the way in which they do so has changed. Many are now opting for so-called distressed exchanges, essentially out-of-court restructuring agreements, to avoid expensive bankruptcy proceedings. But those deals are often just can-kicking exercises towards the courtroom anyway.